Hello everyone, welcome back to the chat room. My name is Ed Ponzi. It's great to be here with you. I'm speaking to you on Thursday night, and it is July the 17th, Thursday night. A lot of stuff has happened since we last spoke. I mean a lot of stuff, okay? Crazy stuff. You know, and you can see today the big red candle on the S&P 500. You know, within the past, I guess, 48 hours or so, we've had Janet Yellen speak in front of Congress and do something that no Fed chairperson has ever done before. Okay, and then today, you know, a plane gets shot down out of the sky over the Ukraine, and you know, wars are breaking out. You know, it's crazy. So the market doesn't like all this, clearly, and you can see that the S&P 500 took a hit today. If you go to the 5-minute chart, you can see that you know, it just dumped right at the open, and then you can see over here it just really starts to sell off, and then and again it's just bad news knocking it down. And the thing that worries me about this is that the yen is going along with it. Now, you know, the yen is probably the ultimate safe haven currency these days, and the yen is becoming stronger. If you take a look at dollar yen, it's almost at a very critical level. You see this, where we are right now, 101.20 approximately is this blue line. And we've been here many times in the past, and but we haven't very often been to 100.80, which is only 40 pips away. We've only been there a couple of times in February and once in May. And if that breaks, look out, because this will take everything with it. It'll take the stock market with it. I'm not predicting that or projecting that, but that's the fear right now. And you do have to be ready and aware of it. Now, first of all, right now, unfortunately, I'm on the other side of this trade on the pound. I'm long the pound against the yen. You know, we've had nothing but good news to report to you folks, and today I don't really have a lot of good news, at least from my camp. We're now in a losing position on this. Well, I'm down 60 pips. It's not that big of a deal when you have a 400 pip stop. You can see it's not that big of a deal, and I do have a higher high, and now this might become a higher low. If this, all that I ask is that this becomes a higher low. If this breaks 172.30 and it makes a lower low, you know, then I might become a little bit concerned. But at this point, it's just pulling into these trend lines, and it's higher highs and higher lows, and I'm long, and I collect a little bit of interest every day that I'm in the trade, and that's a good thing. But the one currency that is likely to gain the most if all hell breaks loose is the Japanese yen. And we saw that in the past, right? If I show you this, I'll take you to the weekly, right? When the stock market was crashing in 2008, what currency was on fire? Here's the Japanese yen just crushing the dollar, right? And the yen crushed everything in sight. It was stronger than the dollar. It was stronger. Take a look at euro yen. What do you think of that move in 2008? This is where Lehman Brothers gets evaporated. Boom. It's like 5,000 pips in a blink, right? And pound yen as well. Pound yen also got the tar beat out of it back here, dropping from 220 to like 130 in less than a half a year. Just a brutal move. And maybe the most obvious head and shoulders of all, right at the top there, right? And and you know, that's huge. That took a year to form, more than a year, really. So anyway, the yen is the one that you want to keep your eye on right now. And I'll show you something else too that I found very interesting. Commitment of Traders report. Now, we're going to find the yen on here. And this is the Japanese yen. Commitment of Traders report. 77,000 are short, 11,000 are long, and we're looking at non-commercial. What does that mean? Those are large speculators, but they're not farmers, right? They're people who are in the market to try to make money trading, but they're large enough that they have to report their positions. And these people are massively short, 77 to 11. 7 to 1, they're short. But what's interesting to me is that the longs are just giving up. Look down here, the change from the previous week. 124 short contracts were closed and 7,500 long contracts were closed, nearly cutting this number in half. And you went from 18,000 and change down to 11,000. That's a pretty sharp drop. And I always look at this when I look at these numbers up here. I think about it. It's like a boat, right? So here's like the, I don't know, port, and this one's starboard, or maybe it's the other way around. I forget. I'm not really very nautical. But what happens is, imagine that there are 77 people on this side of the boat, and there are 11 people on the other side of the boat, right? What starts to happen to the boat? It's going to start to tip, right? It's going to start to tip. Have you ever been on a boat that started to tip just a little bit because everybody was leaning to one side? Do you know that feeling? That feeling, it's like panic, like the only thing you really want to do when you feel that little bit of panic is run to the other side of the boat. And that's what I think is going to happen here. I think they're going to run to the other side of the boat. So in other words, all of these people, 11,000 longs and 77,000 shorts, those aren't people. That's not the number of people. That's the number of contracts. So, it could be, we don't know how many people exactly. But, well, actually down here it says number of traders in each category. So maybe we do know the number exactly. But the point is, 77,000 contracts short are not going to stay short forever. At some point, they get covered, which means 77,000 contracts that must be bought at a future date, and 11,000 contracts that must be sold at a future date. Okay, so 7 to 1 lining up. And that boat looks to me like it's going to tip. So this is not good news for me because I'm short the yen and I'm on the same side of the boat as everyone else, and I don't like that. It's really more of a contrarian type indicator. So I guess what I'm saying here is just be aware that things could turn very ugly here very quickly, and if they do, you're probably going to want to have an opposing position in the yen. And for example, right, I'm already long pound yen. One of the things that I said I would do, and I missed the trade, is to oppose it with this one. If this one breaks, I said I wanted to short it. And don't you know, I missed it. I missed my entry. And but if it comes back up, if euro yen can rally back up to, say, 137.75, which is about 100 pips from here, then it becomes a short for me. Okay, so this broke down. And the yen broke against the euro, but it didn't break against the dollar. Why? Because the euro is weaker than the dollar. And because the euro is not a safe haven currency, the dollar is a safe haven currency, just not as much as the yen is the ultimate safe haven currency these days. Okay, so anyway, I hope that clears things up as far as the yen is concerned. We still have our euro Swiss trade. We're down 13 pips, no big deal. In fact, I hope it comes down lower because I want to buy more. And we laid that all out for you in the previous session. If you missed it, go back and watch it. If Euro Swiss comes down, I want to add to that position. That's how I hope it goes. I hope it comes all the way down to 120, and then the Swiss National Bank has to step in and push it back up. I would be perfectly okay if that happened. Okay, dollar yen, of course, as we said, if this breaks, then the stock market is going to feel a lot of turbulence, and we're already seeing, futures are offered lower overnight. That doesn't always last until the next day, though. We'll see. You never know. Market could decide that it overreacted. Things like plane crashes and things of that nature are very emotional events, invasions, bombs going off, planes getting shot out of the sky. These things generate more of a reaction than other types of events. And sometimes, and we all know why. I mean, you listen, we're all human beings. We all, know why that it creates a deeper emotion. People are getting killed. But as far as the market is concerned, we probably overreact because it's such an emotional, and the market's not really as emotional as, say, the average human being. So the market probably overreacts just a little bit, and then it goes the other way a little bit. So I'm not saying, okay, let's just sell everything and buy yen across the board. Let's short all the stocks. I'm not ready to go there yet. But I got my finger on the trigger. I definitely want to get the euro yen if it pops up, and then I'll be hedged on my pound yen. And so if that happens, I would be shorting at 137.75. My target would be 135.50. That's 225 pips, right? My stop would be, you see this area of congestion right here? My stop would be right above that little peak there. That peak, that high mark is 139.27. So I might have it at 139.35. That would be a 110 pip stop with a 225. It's 2-to-1. Not the best odds in the world, not the best risk reward in the world, but just keep in mind that I'm only using this as my initial target. Okay, so the thing is, if things get ugly, the yen could go very far very quickly, and you wouldn't want to get out of the whole thing too fast. All you would want to do is use this as your first target, right? And then move your stop to break even, which is here, in the event of hitting that first target. And then if it keeps falling, we'll have to figure it out. We'll have a good problem to worry about if it keeps falling from that point. Stop would be right up here, just above that peak. That peak, I'm showing that peak is 139.27. I'm sorry, did I just totally misdid these numbers? That stop's not nearly as far as I thought. 137.75, 138.35, my bad. So it's really only a 60 pip stop and a 225 gain. And that's just for one of the targets, and I would be shooting for another target. I haven't even picked it out yet. If things get ugly, it'll start falling so fast that you're not going to want to get out too quick. Let's put it that way, okay? Anyway, I'm not in. It's all hypothetical at this point. I'm not in, but you know where I want to short it, you know where I want to put the stop, and you know where I want to put one of my targets, okay? And you can even, you obviously don't need me to set that up. Now, we got some mail. We've got mail, and I'm going to put that. We've talked about this currency pair a lot. This is the euro pound. And the 20-period moving average has been outstanding. I'm going to read you. That's the 10. Make that, no, format. Okay, and make the 10 the 20, because right now the 20 is money. Kind of rhymes. Look at that. How pretty is that? How long have we been talking about this? Right? Hit that 20 over and over again and dropped. And look at that. Just late last week, hits the 20 and drops like a stone. I know somebody who's making money on this. Somebody in this room is making money on this. Let's talk about that. Hello, Ed. I am up 239 pips on euro pound. My stop's at 79.84. So I imagine you're just trailing that stop down above the moving average, FXED style, right? I can now fully appreciate the power of FXED. Thank you very much, sir. That is all positive, and I can see how a few good trades can make a great year. That's what I'm talking about, folks. You don't have to be sitting there constantly pulling the trigger. If you're constantly pulling the trigger, then you're going to need to be right a lot. You don't really need to be right a lot to make money. You just need to really be right when it counts. And in this case, One of our students is right when it counts, and he is up massively, massively on euro pound. Before the British pound data release, I was sure I will be stopped out. The pound data was a surprise. I had a pending order on the 20. It came close to it. I moved the entry up. Why? It did not add to my position because of fear of entry. Okay. So let me explain. Let me interpret, right? First of all, we're talking to somebody who shorted up here using FXED and is up 240 pips on the trade, and most likely never was up 240 pips on a trade ever before in their life. And that's true with most of the people I teach. They may have once made 24, but never 240. Then I start teaching them, they start making a lot of pips. And they realize it's not about placing a lot of trades, it's about nailing one or two of them really good. It can turn a bad year into a good year, or a good year into a great year. Okay, so when the time came, he's trailing his stop down, right? He's trailing it down. When the time came to re-enter right here, he actually moved, he had his entry point on the moving average, so he was ready to pyramid in and make the position bigger. And could you imagine if he had gotten filled right here, and then he'd have even more, and it's plunging as he's holding it, but it didn't happen. Why? Because as the price came up, what did he do? He raised the entry. And don't feel bad, first of all. Don't feel bad. This is a very common mistake, and it's a mistake that I've made many times in the past. In fact, I've made every mistake you can possibly make. So I've definitely made this mistake. And I've even gotten into trouble for making that mistake. Allow me to explain. I was a hired trader for a trading company. Whoops. I was a hired trader for a trading company in Manhattan. I used to trade in this huge office on Fifth Avenue between 36th and 37th. Massive office, 400 traders sitting in there at once in one gigantic room. We even had our own shrink. We had our own psychologist, okay? So it's a big place. And we had to justify all of our trades. So if I place a trade, what I would typically do, I would open up a Word document, take a screenshot, right, and write a few notes about the trade. And I would have to turn those in. And we had a risk management department, and they would look at all my trades that I actually placed and compare them to what I wrote. And so I would get in trouble. They would call me in the office. They would say, Ponzi, you write amazing trading plans. Why don't you follow them? And I would always have an excuse. I would say, well, you know, there was an economic number coming out, or the guy on CNBC said something I didn't like, or I was watching the price action and it looked like it was going to go against me, so I got out. So this guy is sitting there listening to me say this stuff, and he's heard it all before, obviously. And he says to me, Ed, think about one thing for a second. Have you ever thought, while you were in a trade, have you ever thought that the price was going to go down and it went up instead? Has that ever happened to you? I said, yeah, it happens a lot. And he said, and Ed, have you ever been in a trade and thought the price was going to go up and it went down? Or thought it was going to go down and went up? I said, does that ever happen? I said, yeah, like every day. Every day that happens. And the guy says to me, Ed, maybe you should stop worrying about what you think is going to happen. Because you don't know what's going to happen. So stop worrying about what you think is going to happen. Just turn it off. You're drawing up really good trading plans. Place the orders. Walk away. Go for a walk. Get away from the machine. Stop staring at it. And you know what? That might have been, I mean, I've gotten a lot of good advice in my day, but that might have been one of the best ones, for sure. You know. Anyway, that's what the type of thing I would do. It's like, oh, it really looks like it's going to come up higher, so I'm going to raise the target higher. I'm going to raise the entry higher, and then it doesn't. And the fact that it looked like it was going to go higher, that's all in my head. That's all in my head. Okay? And I'm projecting all this other stuff onto it because some guy on CNBC disagrees with me. You know, I used to think people on CNBC knew more than I did. Now I'm almost sure that I know more than they do in most cases, especially when it comes to currencies. And you know what? You might know more than them too. I mean, how many of those talking heads ripped off 240 pips on euro pound? I wonder, right? But I know one student in my class who's doing it right now, and I'm very proud of him. So keep up the good work. So that's what it is out there. He also says, you are still the best trader out there, Ed. Thanks. Gosh, you folks are very nice. Here's another note I got. Stronger data out of China, weaker Kiwi. What are your thoughts on the interest rate in New Zealand? Will they keep raising rates? The New Zealand dollar has been very tough to get a hold of, and I've stayed away from it, quite frankly, because here it is looking very bullish, right? It's literally looking very bullish, but at the same time, it's running smack into what? Resistance, right? And that's 3-year-old resistance, but it's right the same as where we just hit. Right? So really, you've got the chart saying buy me because I'm in an uptrend, and at the same time the chart's saying sell me because I'm at resistance. What do? Nothing. I don't have to place a trade in Kiwi, thank God, because I would have probably got my head torn off. Okay? I just have no feel for this right now. You may have heard me say that before recently, but I know that I don't have a feel for Kiwi and for Aussie right now, and that's why I've not been talking about them as much. You've noticed I've been talking a lot about the dollar, about the yen, and about the euro, and about the pound. And I've even been talking a little bit about the Swiss franc, but I really haven't been talking about Kiwi and Aussie too much because I just know that I'm not in sync with them right now. And that's another thing that you learn. It's like, okay, realize that you're just not feeling it with a particular stock or index or commodity or currency pair. If you're not feeling it, realize that and back away. So you know what? I just don't have, and you know what? It doesn't mean that you're bad at trading Kiwi. I mean, later on, you're going to be great at trading Kiwi. I'll tell you the one currency that I had a massive amount of trouble with early on was the yen. I kept track of all my trades, and I was fine except when I traded the yen, and it was like every time I traded the yen, I lost money. I'm not kidding. Like every time I traded it, I lost money. And I talked to someone about it. I said, what do you think I should do? And he said, stop trading the yen. I'm thinking, well, yeah, I know, but really, what do you think I should do? And he's like, no, really, just don't trade it. Don't trade the yen for a month. There's a random amount of time. It could have been a week, but he said a month. I didn't trade it for a month. I didn't regret it either. My results immediately improved. I did not have a feel for the yen at that point in time. Right now, I think I have a very good feel for the yen. I do not have a good feel for the Kiwi, so I'm really not talking about it all that much. Like I said, bullish chart, but smack into resistance. You know what would interest me? A pullback to this trend line or a pullback to this support level would interest me. That support level is around 85.25 on Kiwi. That would interest me. But really, there's not a lot. There's so many other things out there to trade right now. And if the yen goes berserk, it's going to overshadow everything. Now, the question being, is New Zealand going to keep raising rates? I think the answer to that is yes, but it's priced in. In other words, they've been talking about it for so long, about raising rates, and even foreshadowing how high they were going to raise rates this year. That everyone already assumes that they're going to continue raising rates. And that's got a lot to do with the reason why it's been such a good performer this year. Okay? All right, good stuff. I got another question here. This one is, now we're going to switch over to stocks. Stick around, you Forex people, because you know what? Markets are interrelated. And the more you know about about multiple markets, the more it's going to help you trade your chosen trading vehicle. And by the way, you can have more than one chosen trading vehicle, right? Many of us do. I'm not having much success with Forex right now, Ed. To me, the market appears flat without showing me any tradable patterns. All right, and I will grant you that because, I know what you're saying. Take a look at this. Average true range, right? It's like being a surfer. Okay? And every day you grab your surfboard, look at the volatility, it just disappears. Kiwi only moves 46 pips a day. Euro, 40 pips a day. I don't ever remember it being that low. I mean, Euro used to move 40 pips on a GDP report. Now it moves 40 pips a day. Euro used to move 100 pips on a non-farm payroll report. Now it moves 40 pips a day. I've never really seen anything like this before. Dollar yen, 36 pips a day. So what this is like, it's like being a surfer. And every morning you grab your surfboard and you head to the beach and you look out over the ocean and it's flat as a pancake. And you're saying, why me? I mean, well, for one thing, my discussion earlier about the yen, I do think you're going to start to see some waves in the market. But I'll carry on. We all understand that the market is very quiet lately. And by the way, those companies, your brokers, your Forex brokers are losing money because you're not placing trades. They get paid when your order gets executed. Your orders aren't getting executed because the price isn't moving. Therefore, the chart. Look at the chart. This is gain capital, and this is FXCM. These are not pretty charts. These are not pretty charts right now. Why? Because the market's not moving. Okay. Now, I was gaining confidence, he says, on the demo, and then I got thumped on the live account, so I started to stop using the live account until there was more movement in the pair. So now I'm using stock trading. I'm practicing the blaster in the 2020. If a day order is executed, he asks, let's switch to a S&P 500. Right. Here's the question. If a day order is executed, does it automatically fill at the close of that day's price? Or does it continue to trade following sessions until it is filled? Okay. A day order, meaning a limit order, that has a specific price attached to it. It doesn't fill at the end of the day. It fills if the price reaches that point. So if I have a day order to buy, let's say, IBM, and maybe I want to buy IBM, that's a bad example. Maybe I want to buy Starbucks, right? Starbucks had a down day today. Maybe I want to buy it at 76. So I place a buy order at 76. Now, if tomorrow the price comes down to 76, I'll get filled at that time. At the time that it hits 76, if there are enough shares available to fill my order, maybe I want to buy 1,000 and somebody only wants to sell 100 at 76. In that case, I'm not going to get my entire fill. But the way it works, it's not at the end of the day. It's at any point during the trading day. If and when the price hits that level, that's when your order will get filled, assuming there are enough shares available to fill your order at that price. So that's how a day order works, a day limit order. And if it is not filled by the end of the day, which is 4 o'clock New York time, if 4 o'clock comes and goes and the price has not hit 76, it will automatically cancel the order because it's a day order. It's just for that day. Now, suppose you wanted to keep that order in. So I don't care when it hits. If it hits 76, I want to buy. I don't care if it's today, tomorrow, next week, whatever. Fine. That would be a good till cancel order. That means I'm just going to have a buy order here at 76, and it's just going to sit there until it gets hit, and that's that. And that's called a good till cancel. So that's the difference. It doesn't refer to when the order is filled. It refers to the duration of the order. Day orders are canceled at the end of the trading day if they're not executed. Good till cancel orders, they're not canceled until you cancel them. Of course, some brokers will go through at the end of the month and just cancel all the outstanding orders. Or if the order's been on the books for, say, more than 30 days or 60 days, some brokers will cancel them. But check with your broker on that. They all have different, they all have, in other words, there's no standard rule. Each broker has their own way of handling good till cancel orders and the cancellation of those. The platform I use is confusing, TradeStation. TradeStation can be a confusing platform. I think it's a rewarding platform, but it can be very deep, And the orders and positions are shown but not indicated on the chart analyst pages. I think what you're saying here is you just need more time on the simulator to get used to using those orders, because you shouldn't even have to think about it. Okay, if you place an order, if I place an order, I can't place an order right now because the market's closed. Let's say I place an order to buy shares. There's going to be a button at the top of your screen that says cancel. If you have open orders, that cancel button is going to be bright yellow. If you don't have open orders, that button will be grayed out. So you always look at that button and say, okay, do I have orders or not? If that button's yellow, you have orders. Okay? So moving stops presents some difficulty. All you have to do, what I would recommend doing, you just need more time to learn the platform. I would go online. There's all these free videos for TradeStation. In fact, they have their own YouTube channel. They have, I think, hundreds of videos. You just got to go through those videos and get used to how to move the stops and how to see where your orders are. It's all there. It's all there. I don't want to turn this into a class on TradeStation because it's all for free on the web. Also, using your research methods, Blaster in 2020, those are not the trades that you've been demonstrating, and that's correct. I find this frustrating. I do not presume to see through your eyes, but it's not the, and that's true, and let me explain that too. If you took the stock trading course, you know that there are several strategies in there, one called the Blaster, one called the 2020. So you know that if you took the course, now, those strategies, they're not that complicated. I mean, they're laid out very clearly in the course. And I don't want to just sit in this room and repeat them over and over again. I mean, early on when we started doing this trading room, and if you go back and look at the archives, there are a lot of classes where I just sat in here doing trades off of those strategies. And I just didn't want to do that every week because I know you can go back and you can look at the archives and you can see me doing trades off the 2020 or you can see me doing trades off the Blaster. And I just didn't want to repeat myself every week. So I wanted to also show you other alternative ways of finding trades. I'll tell you what, like for example, I just bought a stock today called ACT. There are several reasons why I like this. But probably the most important reason why I like this, there's a conference going on called Seeking Alpha. And do a web search for Leon Cooperman. Leon Cooperman runs a big hedge fund, and he's been around a long time. And he laid out yesterday 12 stocks that he really liked. And he's a fundamental guy. He's a very, very successful trader. And that's what I respect more than anything else, is somebody who's actually, in there doing it. And so I say, okay, you're a fundamental guy, and you just gave out to the world 12 stocks that you like. I'm going to chart them, because if they're 12 stocks that you like, then those are 12 stocks that have good fundamentals. Maybe not the same exact criteria that I use in the course, but I'll give you the benefit of the doubt because you're running an $11 billion hedge fund, and last year you picked 10 stocks and they were up 27% for the year. And not only that, but you refused to even take credit for it. You said, well, it was a bull market, and I respect that. I'm talking about Leon Cooperman. So I want you to, for homework, right, Google Leon Cooperman Seeking Alpha. He's going to drop 12 stocks. I charted them all. This is the one I like the best for a lot of different reasons. First of all, I like that ascending triangle. I like the trend, right? But Cooperman likes it. And I like the fact that it's pulling back. It's pulling back to the bottom of the triangle. It's also pulling back to the 50-day moving average. Right there. Right there. That's why I like it. Why does Cooperman like it? He loves the balance sheet. It's a pharmaceutical company. But better still, he likes it because it is based in Dublin, Ireland. And companies that are based in Dublin, you might recall a few weeks ago we spoke about tax inversion. Right? U.S. companies want to merge with companies that are based in countries with low tax rates like Ireland. So some U.S. company will come along and scoop them up. They'll buy them out, and their effective tax rate will be more than cut in half once that deal goes through. It's almost a no-brainer. Someone should buy it. So I bought it. All right? So that's something different. I don't want to just teach you the same two things over and over again. This is the sort of thing we've never spoken about before. But from time to time, I will do that. If there's somebody out there who I really respect and he's out there dropping knowledge, I'm going to say, okay, Cooperman, I'm going to take your stock picks and I'm going to chart them all. I'll tell you another one that I liked out of the bunch. SuperValu. Now you look at that and you say, well, that's already broken out. How much higher could it go? Turns out it could go a lot higher. That's a 3-year high yesterday, and it could go, wow, from this chart it could go all the way up to 16, right? But wait, there's more. It could actually go all the way up to 45. And now you look at it and you say, wow, there really is a lot of upside in SuperValu. I just don't I don't like the sector that they're in, was the only difference. I mean, pharmaceutical and healthcare is a lot easier to love right now than retail. And not only that, but companies that are potential buyout candidates due to tax inversion, which is where a U.S. company buys a overseas company and merges with them to get their tax rate, essentially. So Merck could buy this, right? Activist, right? Merck could buy them tomorrow and say, we're merging with Activist and we're moving our headquarters to Dublin, Ireland. Their tax rate's going to drop from like 35% down to like 12%, which would save them, oh, I don't know, billions and billions and billions of dollars, right? So it almost becomes a no-brainer. Okay? All right. I think that's enough for tonight. We ran a little bit long. I didn't even get to talk to you about Yellen and her crazy stunt about saying that biotech stocks are overvalued. I mean, is she running the Yellen hedge fund now? Yellen Managing Partners? Yellen Capital Management. The head of the Fed shouldn't be talking about which sectors are overvalued. That's an opinion. It's an opinion. And it's not her job to do that. So anyway, I thought that was pretty nutty. She wrecked Celgene, which luckily we dumped out of. And she wrecked, look at that Celgene now. Ms. Yellen wrecked it, and she wrecked ISIS. We dumped those, I think it was a week ago we dumped them. Took profit. Good thing, right? It's a good thing we did. All right, going to leave it at that. Thank you so much for listening. You're a great audience. Keep sending those questions in, and I'll speak to you again in just a couple of days. Everyone have a terrific day. Take care. Hey, Rick, are you there?